This is Scott Whitwam with your morning real estate investor update. And let's get into the top story of the day. Home sales slipped by 5.4%. The National Association of Realtors released its June 2024 data showing that home sales fell again in June compared to a year ago by 5.4%. This is nothing new, as it follows a continuing trend throughout 2024. And you got it, no one area of the country was exempt from this pullback. As the downturn in sales trend to spread across the U.S. in all four areas of the country as defined by the association. Now, as we are well into the dog days of summer, it is unlikely that the current real estate environment will change much. As sales continue to slow, this does affect the real estate market, and we are beginning to see it happen. Inventory of available homes continue to grow, pushing us a little closer to a full-on buyer's market. How is it that the market is being affected by these interest rates? Well, the Fed rate remains unchanged at 5.33% in anticipation of the next Federal Open Markets Committee meeting scheduled for July 30th and 31st. There is considerable speculation as people continue to wait and see if the Fed will in fact move the Fed fund rates downward. If you remember, at the end of last year, the Fed predicted at least 3 rate reductions in 2024, which never materialized as inflation remained high. Where does that leave mortgage rates? According to Freddie Mac, the average consumer rate for a 30-year fixed mortgage on a weekly average ended at 6.78% last week, and the 15-year mortgage rate average came in at 6.07%. Though rates are about half point below their high earlier in the year, this hasn't seemed to move buyers from their pause. In today's wrap-up, as sales of existing homes fell, the median price of homes continued to tick upwards slightly. It is becoming pretty obvious that on the retail side of real estate, it is certainly moving into a buyer's market as homes sit in the market longer, receive fewer offers, sellers provide more concessions, and inventories creep up. If the Fed board is held from making any correction in its rates due to the continued high inflation, I would expect the mortgage-backed securities market to remain where it is without much movement, and sales of existing homes, including investment properties, entering the retail market to see fewer than expected showings and longer than preferred times sitting on the market. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.